Ed, have others underestimated the potential upside coming through from Tesla around Dojo? This is around, of course, the upgrade from Morgan Stanley.
Yeah, so the thesis from Morgan Stanley, I should say the latest thesis from Morgan Stanley and Adam Jonas, is that the long-term benefits of their work in proprietary silicon and compute, Dojo, could add $500 billion to the market cap. I say the latest thesis because Adam Jonas has talked up the software potential of Tesla before. The first time he kind of came out with this big bull case call and updated his call on the stock like 70% was in 2015. And he envisioned a future where Tesla operates like Uber and Lyft, a rideshare service, but operates its own fleet of Tesla vehicles, own fleet of robotaxis. And clearly in present day 2023, that's not yet come true. But Tesla has made a commitment to develop its own silicon and its own compute power to train neural networks. And the latest that Musk has said is that they'll put $1 billion in an R&D perspective into Dojo to make it better. And Morgan Stanley sees that upside coming.
According to this investment firm, Tesla stock could potentially reach $400 in a few months. And this won't be because of its car, FSD, or even robotaxi tech. So join us as we explore this new Tesla money printer that's kept the auto industry buzzing. Today, this video talks about one of Tesla's biggest strengths, one that's not being recognized by a lot of people, and Tesla investors are included. This fascinating topic showcases the power and potential of Tesla in the world of artificial intelligence, and it's going to be absolutely phenomenal. American investment firm Morgan Stanley has consistently emphasized Tesla's long-term growth prospects, acknowledging the automaker's ambitious goals in vehicle production, battery tech, and energy storage. It has even praised Tesla's leadership in the EV market and its potential for global expansion. No doubt, while Morgan Stanley has voiced concerns about growing competition and the potential for EV supply to outpace demand for vehicles in the future, it does recognize Tesla as a formidable player in the industry, and today's video is going to show how it draws global attention to one of Tesla's biggest revenue opportunities. Let's dive in.
Back to halftime, let's get to our call of the day. Morgan Stanley's Adam Jonas upgrading Tesla to outperform and raising his price target to $400. That's about 60% upside. From here, Jonas saying Tesla's supercomputer project Dojo could have a $500 billion enterprise value. So $400, Joe, that's just where Tesla hit their highs a couple years ago. But, we've heard kind of the up-and-coming aspects, the new market aspects of this Dojo computer for quite some time. Do you think that something's changed now that would indicate that there's an additional $500 billion baked into this opportunity?
Well, Adam is the one that's suggesting the potential here, and some other words that he uses within the note as he talks about this potentially being a $10 trillion marketplace, and that Tesla maintains an asymmetric advantage in that marketplace. Now, you hear those words, that's pretty compelling in terms of believing that Tesla can continue its upward trajectory that it's had so far year to date and eventually hit that $400 price target that he has. Again, my ownership of Tesla is equal weighted in its nature. This is a stock that for you as a viewer, you have to understand it's exhibited a lot of volatility over the last 12 months, and I think you have to size the position accordingly to accept that volatility.
The Tesla Dojo supercomputer is a custom-built machine that is designed to train Tesla's self-driving cars. It uses unique architecture and a scalability technique that sets it apart from conventional supercomputers. According to Tesla, this supercomputer is expected to process millions of terabytes of video data captured from real, live, self-driving situations from millions of Tesla cars. And this will enable Tesla to improve its FSD Advanced Driver Assistance System, which aims to enable full autonomous driving in the future. Hey guys, welcome back to Tesla Tomorrow. Tesla recently surged to its highest share price in over a month, following an upgrade from Morgan Stanley that highlighted a non-vehicle revenue stream. According to Morgan Stanley, this business has the potential to justify a market capitalization exceeding $1 trillion for the pioneering automaker. The American investment firm has been closely monitoring Tesla's journey, consistently offering insights into both the positive and negative aspects of the company. And this time, their comment was extremely bullish, highlighting a critical aspect of Tesla's business. But that's not even all. Morgan Stanley Analysis, led by Adam Jonas, recently upgraded Tesla from a hold to a buy rating and raised their price target from $250 to $400 per share. Is this target price feasible? And how can Tesla stock price rise on the back of the automaker's Dojo supercomputer? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything happening with Tesla. The benefit of the Dojo supercomputer for Tesla is enormous, although not a lot of people realize it. By creating a supercomputer that can train self-driving cars, Tesla will gain a competitive edge over other automakers and tech companies that are also pursuing autonomous driving. It will create new revenue streams for the automaker, such as selling or licensing of its AI software and hardware to other companies or industries. The Dojo supercomputer is not just a machine, but a vision for the future of AI and transportation, a paradigm shift in supercomputing, and it will enable Tesla to achieve its goal of totally solving the vehicle autonomy at scale problem. Simply put, the Dojo supercomputer is a testament to Tesla's innovation and ambitious technology advancements in the field of AI, creating a positive impact on society. According to Morgan Stanley, Dojo, Tesla's AI network, is designed to train its own self-driving vehicles using its own video data, and it's got the potential to expand Tesla's vision to reach beyond vehicle sales and into highly lucrative software-as-a-service markets. It will enable faster and cheaper neural net training, which is essential for developing and improving its AI models. This supercomputer will also allow Tesla to leverage its massive real-world dataset, which contains billions of object labels, depth and velocity data, and road scenarios. Analysts estimate that Dojo would be able to contribute up to $500 billion in enterprise value at Tesla, an impressive figure considering that the company's market share at the moment is currently sitting at a capitalization of approximately $800 billion. Let's now explore ways that Tesla can make some money from this business. First up, as the industry moves towards autonomous driving, Tesla's advanced AI tech can be a valuable asset for traditional car manufacturers looking to compete in the self-driving space. And for this reason, Tesla can license its self-driving technology, powered by Dojo, to other automakers. These licensing agreements and partnerships with other companies will provide significant sources of income for Tesla. Similarly, since Tesla collects vast amounts of data from its vehicles, this data, which is collected by Dojo, can then be monetized by providing data services to third parties like urban planners, transportation companies, and researchers. It can also be used for various purposes, including traffic optimization, city planning, and even academic research. More interestingly, Tesla can establish itself as a leader in AI research by leveraging the computational capabilities of Dojo. It can offer AI research services to organizations seeking expertise in machine learning, computer vision, and AI development. Tesla can also have contributions and collaborations with research institutions and startups, which can then help to generate revenue through research contracts and licensing agreements. Tesla is much more than a car company, even though the bears don't want to admit this. In addition to vehicle sales, Tesla is diversifying its revenue sources through FSD licensing, insurance, robotaxis, robotics, energy products, and even superchargers. In this interview that was recently conducted by Tesla bull Dan Ives, he disclosed why he believes Tesla's supercharger network will represent 3 to 6% of the company's total revenue, or $10 to $20 billion in revenue by 2030. According to him, with the introduction of Tesla's Magic Dock, an adapter which will allow non-Tesla EVs to charge on the NACS standard, Tesla will have an incremental opportunity to further expand its charging footprint to the entire EV fleet. Ives claims that the strategic move by Elon Musk in the long term as a supercharging network is going to allow a large monetization opportunity, and it will let Tesla take up more market share in the charging network ecosystem domestically while laying the foundations for a successful EV transformation over the next decade. Similarly, Tesla's insurance business continues to grow alongside its expansion into various segments, and we believe that in the coming years, the revenue potential for this business is going to be nothing short of remarkable. Tesla's multifaceted approach to growth has already positioned it as a powerhouse in the automotive and technology sectors, so scaling its insurance business shouldn't be that much of a hassle. As the automaker gains more ground, we believe that it can make enough revenue and it will continue to be good for Tesla stock. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.